Strap in, folks. We're diving headfirst into some major financial news. The Coventry Building Society, a well-established name in the UK financial sector, has recently announced its potential acquisition of the Cooperative Bank. This isn't just another routine business deal, we're talking about an agreement potentially valued at up to £780 million. If this deal goes through, we could be seeing Coventry Building Society rise to become the UK's seventh largest lender, with assets ballooning to an impressive £89 billion. Now, that's a number that's sure to turn heads. This move isn't just about climbing the ranks, though. The acquisition would bring the Cooperative Bank back under mutual ownership, a structure it had over a decade ago. So, we're talking about a major reversion here, folks. A kind of homecoming, if you will. Remember, this is more than just a transaction. It's a game changer, a big shift in the banking landscape. This isn't just a game of Monopoly, it's a seismic shift in the banking landscape. Now, let's get to know our two main characters in this financial drama a bit better. First up, we have Coventry Building Society, a stalwart of the UK financial scene. It's a name you've likely heard, particularly if you've ever been in the market for a mortgage. This lending titan has a solid reputation built on a foundation of financial stability and customer-centric services. As it stands, Coventry Building Society is the UK's third largest building society, with assets of around £89 billion. That's no small change, and it speaks volumes about the society's prowess in the financial world. On the other side of the table is the Cooperative Bank, a financial institution with a rich history that stretches back more than a century. Despite some turbulence in recent years, the Cooperative Bank has remained a key player in the UK banking industry, known for its strong ethical stance and commitment to customer service. It's a bank that has weathered storms and emerged stronger, a testament to its resilience and adaptability. And now these two financial Goliaths have decided to join forces. This acquisition, valued at up to £780 million, could catapult Coventry Building Society into the position of the UK's seventh largest lender. For the Cooperative Bank, this move signals a return to mutual ownership, a structure it had over a decade ago. It's a bold step, one that could potentially redefine both institutions. But it's not just about the numbers. This merger could bring about a seismic shift in the banking industry, offering customers an alternative to the traditional banking giants. Both firms will retain their current names and branding during the integration process, ensuring that their established reputation and customer loyalty remain intact. Indeed, this acquisition could be a game changer. It's a move that could provide Coventry Building Society with an opportunity to expand its customer base and increase its market share. For the Cooperative Bank, it's a chance to strengthen its financial position and return to its roots in mutual ownership, a move that could potentially enhance its appeal to customers. Two powerhouses, one bold move. But what does this mean for the future? In this world of finance, it seems we're going full circle. We're seeing a notable shift, with the Cooperative Bank poised to return to mutual ownership, a structure it held over a decade ago. This move isn't just a nostalgic trip down memory lane. It's a strategic decision with significant implications. Let's delve a bit deeper into this. Mutual ownership means that the bank is owned by its members, the customers. This is a stark contrast to the common banking model where banks are owned by shareholders. This brings a sense of community and shared interest, making the institution more customer-oriented. So what's the upside? Well, mutual banks tend to focus on long-term stability rather than short-term profits. They're less likely to take on risky ventures and more likely to invest in the community. This can lead to more sustainable growth and a stronger local economy. For customers, it often translates to better rates and more personalised service. Now, this isn't to say that mutual ownership is a magic wand that will solve all issues. There will be challenges along the way. However, the potential benefits are significant. It's a model that puts customers at the heart of the business, aligning the bank's interests with those of its members. With Coventry Building Society's acquisition, the Cooperative Bank is set to become part of the UK's seventh largest lender. This isn't just about size, it's about the potential to leverage mutual ownership to deliver value to customers, enhance stability, and strengthen the bank's position in the market. This shift is a bold move in a sector often dominated by shareholder-owned banks. It's a step towards a more inclusive and customer-centric banking model. It's a return to the roots with a modern twist, and it's a change that could shape the future of banking as we know it. Back to the roots, but with a modern twist. Let's see how this plays out. Now, don't expect to see a Coventry co-op branch popping up on your high street just yet. This isn't a whirlwind romance, but a carefully planned courtship. The integration of these two financial giants is expected to be a slow and steady process, spread over several years. It's a dance of precision, where the goal is to harmonise, not overpower. And during this period of integration, both firms will retain their individual identities. Yes, you heard it right, the Coventry Building Society and the Cooperative Bank will continue to operate under their respective names, maintaining their distinct branding. This is not just about the merging of assets, but the weaving together of two histories, two philosophies, and two sets of values. It's about creating a financial entity that's greater than the sum of its parts. So while there's no immediate change on the horizon, the future holds an exciting promise of evolution. It's a long road ahead, but one that promises some interesting developments. So what's the takeaway from all this financial jargon? Well, let's break it down. Coventry Building Society is on track to acquire the Cooperative Bank, a move that could catapult it to become the UK's seventh largest lender, with assets of around £89 billion. This is no small feat. This acquisition is a game changer, as it could bring the bank back under mutual ownership, a structure it had over a decade ago. This is significant because mutuals are owned by their members rather than shareholders, which can lead to a more customer-focused approach. The two firms will retain their individual identities during the integration process, a transition that's expected to unfold over several years. It's a strategic move that could reshape the banking landscape and set a precedent for future mergers and acquisitions. But let's not forget, this deal is not set in stone. It's subject to contract agreement and regulatory approval. So we'll be keeping a close eye on this one, as it could have far-reaching implications for the banking sector. Remember, in the world of finance, change is the only constant.